This is a follow-up video to the previous Basics of Employees Tax video, in which we will take a look at an example. In this example, we have the following information provided. We have Solomon, who is 32 years old and unmarried. He had the below income and expenses for the month of December 2020. He is employed by SASSA Consultants as a manager. So we have a table there and notes reading as follows. At the end of December 2020, Solomon is entitled to 5 days leave. He needs to take this leave before the end of March 2021. If he does not take the leave by then, SASSA Consultants will pay him out 1,600 times 5, which would be 8,000 on the 31st of March 2021. In January 2020, Solomon was granted a bursary of 25,000 to study. Unfortunately, due to circumstances, during the year, Solomon did not complete his studies and informed SASSA Consulting on the 1st of December 2020. And Solomon will have to repay the amount over the following 12 months, starting from the 31st of January 2021. Assume that the official rate of interest was 7.75% at all times. He did not make a repayment in December 2020. Solomon's salary was increased by 800 per month on the 1st of December 2020. This pay increase was backdated to August the 1st, 2020. His salary received from the 1st of August was therefore also increased with 800 per month. He received this backdated total amount for the amount of August for the months of August to December in December. Solomon belongs to his employer's pension fund. He contributed 3,600 to the pension fund during December. His employer contributed an equal amount. Solomon makes retirement annuity fund contributions of 600 per month. He has not informed his employer of these contributions. Solomon has an agreement with his employer that they will deduct 2,000 rands from his salary each month and pay it directly into his home loan account. Solomon contributes 3,215 to a medical aid fund each month, and his employer contributes 2,000 rands per month to the fund. During the December 2020, he visited the doctor once and had to pay a levy of 300 rand, which was not covered by his medical aid. His prescribed medicines amounted to 800 rand, of which the medical aid paid only 730 rand. We are required to calculate the amount of employees' tax to be withheld by SASSA Consultants from Solomon's remuneration for December 2020. Before we get into what is required, let us note the information that should have stood out whilst we were reading the information that is provided. Number 1, the taxpayer is younger than 65. He is 32 years old. This means that if we are to take into account medical credits, when we calculate the employee's tax, we will only consider Section 6A medical credits and not Section 6B. The income and expenses provided were not provided as annual amounts, and therefore we would need to calculate the annual equivalent of the balance of remuneration. Remember, this is the expenses and income for 1 month, which is December. The Christmas bonus of 50,000 is an annual amount which should not be included in the monthly remuneration. Note 1 is an indication of variable remuneration, which is taxable in the month in which it is paid. The fact that Solomon will be repaying the bursary amount with no interest should get you to thinking about the provision of an interest-free loan to an employee, which is a taxable fringe benefit and therefore would be included in remuneration. The backdated salary is a variable amount which should not be included in the monthly remuneration. Solomon contributed to a pension fund, and this is an allowable deduction that should be considered in calculating the balance of remuneration. His employer contributed towards the pension fund as well on his behalf, which is a taxable fringe benefit and therefore will be included in remuneration. Solomon has not informed his employer of his retirement annuity fund contributions, and therefore his contribution will not be considered as a deduction in his employee's tax calculation. The employer's contributions to Solomon's medical aid fund will be remuneration as they are a taxable fringe benefit. On an overall analysis of the information provided, as we have annual as well as variable amounts in our scenario, it means we will need to perform two calculations to get to the employee's tax that needs to be withheld for the month of December 2020. So we will need to calculate the employee's tax on the monthly amounts, right? As well as the employee's tax on the annual amounts, including variable remuneration. And the sum of these two amounts will get us to the final figure of what is required, which will be the employee's tax for the specific month, which is December 2020. The first calculation will entail calculating the employee's tax on the remuneration excluding the annual amount. We will need to look at the remuneration and the deductions to get to our calculation. Now let us look at what makes up our remuneration. It is the salary of 40,400 that was given in the information, the travel allowance of 4,000. What we were given in our scenario is 5,000. Remember, according to the definition of remuneration, we will only include 80% in remuneration. So you take that 5,000, multiply it by 80% to get to that 4,000. Since we were not given any information in terms of kilometers traveled, the assumption therefore is we will include 80% until we are given information on the contrary. The repayment of the bursary with no interest is a taxable fringe benefit as we had analyzed previously, which should be included in remuneration, and the cash equivalent of 161, which is the 25,000 multiplied by the 7.75%, which is the official interest rate given in the scenario, divided by 12 months, is therefore included in remuneration. Remember, if no interest was charged, then it means interest was charged at zero. So you will take the difference between the official rate, the official interest rate, which is 7.75, less 0%, which will still get you to that 7.75%. Pension fund contributions made by the employer for the benefit of the employee will result in a taxable fringe benefit, which is also remuneration, amounting to 3,600. The same as the medical aid contributions of 2,000, which will also be included in remuneration, resulting in the sum of remuneration of 50,161. The next step in our calculation is the balance of remuneration, which is determined after taking into account the deductions into consideration. Solomon made contributions to the pension fund, and therefore his contribution, as well as the contribution made by the employer on his behalf, will be considered in the calculation as deductions, right? So the total of the amount contributed to the pension fund will be the 7,200. He further made contributions towards his retirement annuity fund, which will not be allowed as a deduction in determining his balance of remuneration, as the employer is not aware of these contributions. This does not mean, however, that the retirement annuity fund contributions will not be considered in Solomon's taxable income calculation, right? So at assessment or on assessment, the contributions made by Solomon will be considered in his personal taxable income calculation. But because he did not furnish proof to the employer that he has made contributions to the retirement annuity, the employer will not be aware of these contributions and therefore will not take them into consideration in calculating the employee's tax. It is important to note that this rule is only applicable for employees' tax purposes. Remember, employees' tax will be calculated by the employer, so they will use only the information that is available to them. The total retirement contribution deduction to be considered in this calculation will therefore be only the 7,200 that is contributed to the pension fund. And that will be limited to the lesser of two amounts. Remember, if you think back to your section 11 capital F deduction, your retirement contributions, if you are doing your normal taxable income calculation, there's three limits, right? So it's the 350,000 or 27.5% of the greater of remuneration or taxable income, and then the last limit is your taxable income, right? In employees' tax, or in terms of the fourth schedule, the limitation is only two amounts, which is the 350,000. Remember, the 350,000 is an annual amount. So for you to get it to a monthly amount, remember we are working with monthly amounts, right? For you to get it to a monthly amount, you will divide it by 12 to get to 29,167. That's the first limit. Or 27.5% of remuneration, which is the 50,161. That is over there, right? And that will get you to the second limit, which is 13,794. Why do we only have two limits? If you think back to section 11, capital letter F, it refers you to taxable income. So if we think about that 27.5%, it's 27.5% of the greater of taxable income or remuneration, right? So the employer will have information that will be used to calculate your remuneration. So they have information regarding this 50,000 over here that you have, right? But they will not necessarily have to your other income that will get to the taxable income. And that is why we ignore that taxable income, and we only look at 27.5% of the remuneration, right? So the lesser of the 29,167 or 13,794 is obviously the 13,794, and this amount is higher than the actual contributions made of 7,200, and therefore there will not be any limitation, and the whole 7,200 will be allowed as a deduction to get to the balance of remuneration. The payment of the home loan as well as the trade union payment will not be allowed as deductions for employees' tax purposes, resulting in the monthly balance of remuneration of 42,961. Remember, these amounts are given monthly, so these are monthly amounts. We need to then convert these monthly amounts to the annual equivalent of remuneration so that we can be able to calculate the normal tax on the amount. So the next step is therefore to convert this monthly balance of remuneration to the equivalent balance of remuneration, and we will do that by multiplying the 42,000 by 12 months to get to the annual equivalent of 515,532. And then if we look at the normal tax on this balance of remuneration using the 2021 tax tables, that will give you an amount of 130,784 less the primary rebate of 14,958 and Section 6A. Remember, we're not considering Section 6B credits. So your Section 6A medical credits will be the 319 for the member times 12 months, which will give you 3,828. The monthly employees tax on the remuneration. So remember this 111,998 is the annual amount. So we need to calculate the tax for the month of December. So we will need to take the amount of 111,998 and divide it by 12 to get to the employees tax on remuneration excluding annual or variable amount of 9,333. Okay. The second calculation, remember the first on the previous slide, we were looking at the employees tax on the remuneration excluding annual amounts, right? So we have determined that that amount is the 9,333 rands, right? The second step then is to calculate the employees tax on the annual amounts as well as the variable amounts. We will start off this calculation by using the annual equivalent remuneration on the first calculation, which is that 515,532, and we will consider the following amounts. The leave pay that we saw there in the first note, right? The leave pay is a variable amount which will only be included in remuneration on the date of payment, right? As no amount has been paid yet, we will not include this amount in our calculation, hence we have that nil over there. The backdated pay is also a variable amount, but as it was paid in December, which is the month for which we are calculating the employees' tax, this 4,000 will be taken into account in the calculation. The 4,000 is the 800 rand increase for 5 months from August, September, October, November, including December. So that is 5 months times 800. The bonus is an annual amount which needs to be included in our calculation as it was paid in December 2020. So remember in the basic principles of employees tax video, we said you need to pay careful attention to the month in which the amounts were paid, right? Because the bonus was paid in December and we are calculating employees tax for the month of December, then we need to include that bonus in our calculation. So the sum of the annual equivalent, which is the 515,532 that we started off, right? Plus the annual variable amounts, results in an amount of 569,532. The normal tax on this amount of 569,532 less the rebate and medical credits similar to the first calculation will result in an amount of 131,438. So this will be the tax on remuneration, including the annual or variable amounts. In order to determine the employee's tax on the annual or variable amounts, we will take the difference between the tax on the remuneration, excluding annual amounts, and the tax on remuneration, including annual amounts, which results in 19,440,000. So that 19,440,000 is the employee's tax on the annual amount only, right? And then remember, that is not what we are required to calculate. We are required to calculate the employee's tax for the month of December, which will consist of that employee's tax on the annual amount, that being the 19,440, as well as the monthly employee's tax on remuneration, excluding the annual amount of 9,933, and that will get us to a final amount for the employee's tax of December amounting to 28,773. I hope this example helped in applying the principles of employees tax discussed in part 1 of 2 of the employees tax videos. Thank you.